You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is Friday. It is noon Central. It is 1 p.m. Eastern. Are you ready to talk some vol? Well, I hope so, because you tuned into a vol show. Some might say the premier program for volatility traders. Yes, welcome to Volatility Views. My name, of course, Mark Longo from the THE, optionsinsider.com, accept no substitutes, as well as, of course, from the ever-compelling network. A lot of fun stuff coming at you this week, kicking it off with the old OB on Monday, all the way through to OB again yesterday, a little options boot camp in between, a little TWIFO in between, of course, some pro Q&A action, all sorts of fun coming at you this week. Interviews, which you're already hearing actually on the pro side. So if you're on the pro side, you're already getting access to some of that fun stuff we did from OIC. More to come. If you want to check it out for yourselves, get early access to all this goodness. You want to come back after Vol Views for a little bit of options oddities. Only one place to get that. The optionsinsider.com/pro is the place to go. Congrats to our longtime pro member, Age Delaquarius, who won the April Pro Trading Crate on Monday, courtesy of one Uncle Mike. All right, let's go around the horn, see who's joining us, because the clock is ticking on the show today. Listeners, first, let's go out once again to, I don't know if he's in the hinterlands of Chicago or maybe down in southern Indiana there at the Kelley School of Business. We are joined once again by Mr. Russell Rhoads, and we call him around here the once, future, and present Dr. VIX. We've had a request, a suggestion to, because he's talking VSTOXX all the time now, and all of his research these days is VSTOXX, to maybe amend that to Dr. VSTOXX. Mr. Rhoads, welcome back to the show. What do you think about being the once, future, and present Dr. VSTOXX?
I like it. V2X. I'm going to get that. That's going to be my new license.
V2X. Get it tattooed right on the forearm.
Got to replace my VIX license plate with the V2X license plate. Yeah, and if I cut you off and you see that Chicago White Sox VIX license plate, yeah, you're going too slow. That's why I cut you off.
Dr. VSTOXX, more syllables, but we might be able to make it work. We'll workshop it.
Yeah.
We'll workshop it.
How about Dr. Vol?
Dr. Vol? That also works. That's more blanket.
The Vol doctor, kind of like the love.
There you go. The love doctor. The love doctor, Mr. Rhoads. And also joining us, he is not a love doctor. He is quite the curmudgeon. He is the rock lobster himself, Mr. Andrew Giovinazzi, from the shores of Maine by way of Option Pit. And the reason why I say the clock is ticking, because this man, first world problems, has to go put his yacht in the water in approximately 24 minutes. So we have to get going. Mr. Rock Lobster, welcome to the show. Glad you could delay your Thurston Howell III boat launch.
Well, it was my dock in the water, not the yacht.
Oh, I'm sorry. The yacht comes after the dock.
Yes, the boat gets connected to the dock. Anyway, yes, I'm here. The Clam Pirates were here this morning, pulling out their $1,000 haul again because the prices of steamers are going through the roof. But all is well in the pit of options.
I hope you're standing there with your shotgun demanding your 15% tariff off the top, saying, I want 15% of that $1,000 every time you come through. That'll pay for your dock.
I think that's fair.
That's fair. I think that's very fair. As we keep on rolling into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everyone, welcome to the Volatility Review. And I got so excited at the top of the show that I neglected to mention we do have a bonus guest holding down the UVIX hot seat for us this week. Beaming in all the way from Australia was Gary Norden, a hedge fund manager over there at NN Squared Capital, talking all sorts of volatility from an international perspective, VSTOXX, all kinds of fun stuff. We actually had to beam him in yesterday because it's like 1 o'clock in the morning there now. Those Australians, it's hard to get them on the U.S. time sometimes. But interesting stuff, so stay tuned for that at the end of the show. It's kind of a bonus for you this week. And also because the Rock Lobster has to run to put his yacht in the water, we're going to focus domestic first. Russell and I will come back with a little international vol after this guy shuffles off to the yacht land. But what's shuffling off in the markets out there today? Well, it kind of depends where you live in, listeners. Right now, if you're in the NASDAQ, it is shuffling off to the red, off about 0.2% out there right now. The S&P, again, most of them were green a little while ago, listeners. Now the NASDAQ has turned to the red. The S&P struggling to stay green right now, up slightly. It's pretty much unched on the day. We're still north of 5200, 5215 to be precise. But we'll see if the sucking sound will suck it all down. And the Dow up about 0.25%. And our old friend, the Russell 2000, they didn't get the memo today. They're off almost exactly a full percent out there today. So they're coming for small caps today, and they're coming for NASDAQ. Not quite coming for the rest of the market yet, but again, the day is young. In terms of vol, they're coming for that a little bit as well, but we'll see if that persists. Right now, hanging out at about a 12.75, down about exactly a point from where it was this time last week. Also interesting, VVIX at about a 73. That's down a full point from last show as well. We're starting to get into some rarefied territory. I can't remember really the last time we saw a 73. And I had to go back and look, actually, listeners. And I also started wondering, have we ever discussed live on the show a 60 handle in VVIX? I could not recall that off the top of my head. The answer to that is yes, we have seen one in the lifetime of this show. It was back in May of 2014, May 9th of 2014 to be precise. The show was running that long ago, listeners, a decade ago, believe it or not. We hit a 61.76. That's where it closed, actually. So it might have gotten lower intraday. So yeah, we did get a low 60 handle. I don't recall discussing it that much on the show back then. It's been a while, obviously. We did break 74 ever so briefly a little over a year ago, beginning actually the very first day of trading last year, January 3rd. It was at about a 74, 73.98, I believe. And then before that, you got to go all the way back to February of 2019 to get the last time we were really kind of down in this range. So pre-pandemic, you got to about a 74.98, just barely broke 75 back in February of 2019. So 73, that's a long way around to saying we're in some fairly rarefied territory right now. You got to go back a ways to really find a lot of data points that really come close to this. So intriguing stuff on the vol front. Since Thurston Howell has to run soon, we'll let him go first. Professor is the other guy. Mr. Millionaire. What's catching your eye in the world of vol, sir?
Well, I mean, kind of what you said. I mean, not very long ago, people were kind of freaking out about the world. I mean, I'm pretty sure, right?
It was like 3 weeks ago.
I was just going through this with my students. Traders, so one thing I was explaining to, students is that for the most part, liquidity providers they're constantly buyers of options because the public sells, right? They write calls, they write puts, there's a myriad of trades out there, obviously, but all I know is I was a liquidity provider for 15 years, and I spent a lot of time writing blue, a lot of time writing brown and black tickets, which were buy puts and buy calls, respectively. So, and we got the weekend coming. So there's always this kind of pressure on volatility to kind of make it lower. I call it like, it's like the tide coming in. It is going to happen. So now, as soon as the market starts to move, that all changes. But today I was pretty surprised that the liquidity provider, now I'm assuming, again, if I'm in the pit and this is me, I'm dropping vol as fast as I can because I'm loading up, and now you have all these weeklies, so I can't even imagine what the gamma numbers look like probably for some of these guys. Be interesting to see just for a little fun. But I'm seeing like a 10-day realize at 13, 30-day realize 13, and VIX is 1276. So the full VIX calc, with all those little putties in them, is lower than the last 10 days, lower than the last 30. So that is a tell that nobody cares about the CPI. They assume it's going to be a little hot, but whatever. Maybe the interest rate thing, everybody's been like feasting on this interest rate thing, getting a cut in June or whatever, which we don't think is going to happen. But they're already discounting vol for the next, they're putting the summer in the summer, already. So I thought that was pretty, I thought that was interesting, substantial, and we could see lower vol, basically, is the short answer. And this is how does VIX get lower? When the major liquidity providers are long, 50 million Vega, that's how it gets lower, 100 million Vega, or whatever the number is now, because so many contracts trade, who knows? And that's how VIX prints a low, or new low. So we haven't had the 11 handle, I don't think, since December. So I think, at least for right now, post CPI, we could see something like that, but pretty low vol. And I also believe some of the upside is kind of out of the market, maybe until NVIDIA prints their earnings on the 22nd. So kind of in this funky little lull here for VIX. Could be wrong, but that's what I think the market is telling us today.
It's funny you mentioned that, because I had a similar thought when I saw everyone just crushing all this vol. I was like, wow, they just waited for pretty much the first week of May. I hate that cliche, but they're just going for it. They're selling everything. Oh, it's May already on the calendar flip, bam, hit all the bits. That seems like what is happening out there, because they have no reticence at all about selling any vol, which is a long way around to saying, Mr. Rocklops, so those UVXY June 20 puts that you mocked. Tell you what, I'll let them go to you for $1 right now. Nice guy that I am. I'll let you have a piece of that action if you insist. Get it?
I mean, it's you could almost, I don't think it's outside of the theoretical decay line, but they are 8 cent bid now. You can get out for 8 cents.
I'll be generous. I'll let you have them for $1. I'll let you get in on the party. Why trade that listed offer when you could trade the OTC quality value that I'm offering you here today, Liz?
I guess things look differently if VIX prints 11. Then you'll be laughing all the way.
Laughing all the way to the proverbial bank. Let's go out now to the newly minted Dr. VSTOXX. I got to work that into the lexicon a little bit. A few more syllables, a little bit more work for the tongue. What do you think, listeners? You like that? But he is crunching the numbers out there on VSTOXX. We'll get to all that fun in a second. Keep your VSTOXX powder dry right now, Mr. Rhoads. What is catching your eye in the rest of the volatility space this week? As we were just saying, they are definitely coming to do something in May. I won't say what it is because it's part of a cliche.
You mean buy away on VIX?
Yes, that's exactly what the cliche is.
I'm kind of shocked. I'm just, it seems like good news, bad news, or any news all seems to be good news. We don't have, major numbers facing us right now because we've got, we just got the employment number and the FOMC behind us last week, but we've got PPI and CPI next week, and maybe I'm just kind of hanging my hat on. I feel like I've been saying we got to get a second round of inflation. It does not appear that it is coming, and Powell made it sound like they don't expect it either. And we all know that those guys are complete geniuses and never make any mistakes. So, we got VIX, with a freaking 12 handle, which just blows me away at this moment. It really does. The one thing that I do find kind of interesting is last week when we went out, just finished up the week, I think the curve was somewhat flat. And the futures have not gone down as much in line with the spot this week at all. So there is a little bit of bracing with the May contract at a little under a dollar premium to the spot VIX. Maybe that's a function of we do have a couple of numbers next week. I don't know. That just might be a thought with respect to the curve. And we continue to June, July, August. We're still kind of got a bit of a premium, so there's a bit of nervousness out there, but it's not nearly as much nervousness as we've had maybe the past 2 or 3 months. Maybe it's sometimes the biggest moves in VIX are a combination of surprise and volatility, and maybe we're setting up for some sort of big surprise where you can actually benefit from it right now.
Is there a big surprise in the offing, listeners? Well, let's find out as we keep on rolling out there into the land of the volatility surface right now. And as you might guess, that's a whole term structure shifting down a wee bit. As we kicked off the show, the June future was down a little over a half a point, about 0.6 of a point. And that front May future down nearly a full point, about 0.85. So coming in quite a bit. If we go all the way out, we're at about a 1370 when we kicked off the show in that May future. If you go all the way out to that October timeframe everybody's looking at right now, we're at about an 1870 out there. So fully 5 points between May and October. I'll leave that up to you whether you think that's too steep, whether that's just right Goldilocks level of contango. One thing for sure, we don't have to have the backward debate this week. No backwardation out there in the VIX futures term structure. Mr. Thurston Howell III, sir, we'll start with you. What is catching your eye out there in the vol surface, if anything, this week?
It's starting to normalize a little, because I have like the Andrew Weird VIX theoretical value that I measure from basically zone 1. So how much forward value is in the curve normally when the market is, running the 12 handle, we're in zone 1, vol expectations short term are very low, and you get the kind of the big upward sloping curve, right? And we did like a regression and fit a line. And so I go, okay, so that's kind of what happens when things are normal. And then everything that's not normal is, basically realized vol picks up. So I kind of go with, okay, when the market's not moving, what's the curve look like? And then when the market moves, who knows, right? Who knows? Because you could be moving anywhere. So we are approaching for the first time, probably since January, I'm going to say, the last time this actually starts to fit my ideal line, I believe. So you're getting like the spot vol lower and the volatility futures higher, got higher forward vols now and lower short-term vol. So, and that sets up for kind of the slow melt on the like the vol products and things like that. It's harder though, because, from VIX here, like, it ain't going to 10 tomorrow. So it can go to 15 tomorrow, but it ain't going to 10. So you have kind of that, that vol curve, the steep vol curve lends itself to kind of a slower moving downward VIX and like little tiny decay in the vol products. But you'll see like SVIX and stuff like that, they're all bumping up today a little bit, and UVIX and VXX and all those are bumping down. And it could be like that for a while. I mean, I don't know how long it's going to last, but at least for right now, it's the first time we've had a semi-normal looking contango curve in like 6 weeks, 8 weeks, I'll say 12 weeks. It's been a while. And usually that means, the market's expecting less going forward, less movement. So That's what we got. I'm just reading the tea leaves that are presented to me.
The tea leaves. Mr. Dr. VSTOXX, sir, what tea leaves are you reading this week?
I just paying attention to the curve, like Andrew just said, but also that really low. VIX being down is one thing, but when VIX and VSTOXX are down together, like they are right now at such low levels, often we'll see VIX reach a low level and it will attract some call buyers, just because of the nature of the mean reversion of VIX. And when it's at a pretty low level, you might get a lot of bang for your buck if you get some sort of sell-off in the equity market. So I'm just surprised to see VSTOXX as low as it is right now when VIX is giving you long opportunities. But, VIX is back down where it was near the lows back in December. And I don't, I feel like we might be getting some tail risk exhaustion. Where, we've been buying protection. You buy protection, it expires with no value. You keep going that route, and eventually you're like, why am I buying all this insurance? Heck, summertime's a really quiet time. Let's skip on the hedging right now. And it just might be some hedging exhaustion out there among those players that are the long volatility players in the vol space.
Let's keep on rolling, listeners, into the land of VIX, because, again, Mr. Thurston Howell has to go put his boat in the water. Well, let's go out there today. Is it a banger day on the VIX options front? The answer is, kind of. 433, so it's respectable, all things considered. Not lighting the world on fire, but not a $1.50 either. The ADV has dipped a little bit below 900K, 898 right now. It's down 6,000 on the week. In terms of top 10, what's going on out there in VIX land right now, listeners? Well, it cost you 203,000 contracts to break into the top 10, and we are still 9-1 calls over puts. I'll break all that fun down. We'll also get to the Russell's weekly rundown in a second, but I know Mr. Howell has to go. He's already submitted his crystal ball pick, so I will reveal that at the end of the show. Keep you waiting a little bit, listeners. I unfortunately had to see it, so I won't let it color my prognostic, because I never do. I always fade the Rock Lobster. But Mr. Rock Lobster, before you have to shuffle off the volatility plane here, sir, anything catching your eye from an activity perspective in VIX options this week, including this very funky ratio? Looks like they sold calls and then they bought a put spread maybe, and then also sold, like, did a synthetic on Monday, all kinds of funk for about a couple 100,000 contracts on Monday. And then anything catching your eye out there in the rest of the vol ETP universe, sir?
I didn't see like a ton of volume. There is some play, like, if you think VIX it's possible that's going down, you want to see some like downside put action. And in June, the busiest contract is the June 13 put. So at least go looking at, 10 strikes up, 10 strikes down, which all of a sudden, with VIX at 1274, the 13 put for 35 cents looks kind of appetizing. The problem is we have not been able to stay below 13 for any length of time in 2024. So, I would think we would see more like risk reversal action, stuff like that, down here. But, besides that type of trade, nothing really has caught my eye big this week. And I think mostly because VIX has not done very much. It's kind of just sort of slid down a little, which does not bring the buying bros in, I should say.
The buying bros. Sounds like, a speculating company. Come in, maybe they buy up those old storage units and see what they get. Like on those hoarding shows or whatever. Oh, the buying bros are in town. What are they going to buy today? Maybe they're a real estate firm. We buy your house with cash. Well, and nothing catching your eye in the ETPs this week, sir? You're not slinging any UVXY or your beloved VXX or SVIX or anything?
I tried buying some SVIX calls because like the 30-day erosion trade was setting up well, but put it this way, I bid in the middle, and I got laughed at for 2 straight days. So no one was in, with the vol this low, you pretty much have to take the offer if you want anything. So I'll just say that if you're trying to buy calls in the inverse vol products, or buying, I didn't try to buy any puts this week, just the calls in the inverse 30 days out. You were mocked and scorned for your midpoint bid.
Isn't that the best when you put an offer in on your trading platform and the laughter just comes reverberating back through your computer speakers or perhaps your phone? they just play a sound.
Your 10 or 20 lot becomes 2,000 all of a sudden. You're like, oh, I guess this is really what they wanted to do.
Just a cascade of laughter just pouring through your speakers saying, how dare you? Who do you think you are out here moving our markets? Well, Mr. Thurston Howell III, you have to go move your your yacht. So before you go, sir, what do you want people to know? And also, where should they go if they want more, maybe yacht advice and like what lacquer goes well for shining the deck? All that fun stuff, all the boat stuff.
Yeah. 888-301-optionpit.com. Yeah, if you want to trade vol and SPX or SPY almost every day. So come on in and check it out and see how you can use these vol products and the indexes. There you go.
There you go. Check him out at optionpit.com and indeed his newest URL, yachtfun.com. He's got a fun little captain's hat on the cover of the homepage. It's good stuff. Check it out, listeners, over there. And you'll get his vol prognostication in a little bit. But now it is time for us to sink our teeth into all this paper here on the VIX front. And like I said, not the most banger of days, but we'll get to all that fun in a second. Let's look at the top 10 size positions. Then we'll get to what everybody here is really waiting for. A little bit of Russell's weekly rundown action. But before we get there, number 10, listeners, our first and only put in the top 10 this week can be found right at the beginning at number 10, 203,000 of the May 15 puts, and the rest all calls all the time. So if you're here for a bit of a VIX put palooza, dare I say, go elsewhere. But number 9, 212,000 of the June 20s out there. Dare I say it, the very reasonable June 20s. Number 8, 219,000 of the May 16, so even more reasonable. Interesting, a lot of reasonable paper to kick off the week this week. Number 7, 220 of the May 47. Oh, here we go, right back at it. May 47 halves. That's what we know and love. Number 6, 228,000 of the AUG 47 halves. And I know they're not buying the 47 halves as part of those ratios and they're short them. I get it. It's just on its surface, ridiculous strike. Number 5, 232,000 the May 25s. Feel free, all you funds are trading. Come at me. Go ahead. We'll have a fun debate on the show about why that's a ridiculous strike. Number 5, 232,000 of the May 25s. Number 4, 251,000 of the June 35s. Number 3, 264,000 of the May 35. So June not doing it for you. A little closer to the fire in May. May 35s, are we going to get there? Clock's ticking on those bad boys. Number 2, 271,000 of the May 20s. And number 1, yet again, 324,000 of the May 18s, looking ever more optimistic now. 18s didn't seem like that outlandish not too long ago. Now 18 seems like a lot of heavy lifting has to be done in the vol space to make those relevant again before expiration. But you know what's always relevant? We're always here for it. It's a little bit of Russell's weekly rundown.
Now, Russell's weekly rundown. Now, Russell's weekly rundown.
All right, the theme's so nice we have to play it twice. Mr. Rhoads, sir, I hear you have an extra special 27-minute Russell's weekly rundown for us. Have it?
No, it was the quietest week for weeklies that I've seen in some time, and that may just be going along with what we've just been talking about. If you're using weeklies, you're typically targeting, some sort of economic number. If you're using the weeklies that expire this coming Wednesday, I believe PPI comes out the day before, and then CPI comes out the next day. So generally I can pinpoint some of the, what they're doing date-wise on these things. Not really, not a lot of interesting stuff here, but we're going to coin a new term. You love it when I come on and try to coin.
I like new terms.
I'm kind of bummed that Andrew's not going to be here for it because I love his one laugh at the things that I come up with. So on Monday, with VIX up at the nosebleed 1363, we had a seller of 4,000 of the May 15th 17 calls for 22 cents. I don't know if that's worth 22 cents, but I've also keep waiting for the end of the world, and that doesn't come either. Then on Tuesday, we had a buyer, and I do like this trade. And we've seen last week when I did this, we saw a lot of interest for calls that expired on the last Wednesday of this month, or May 29th. We got a buyer of 4,000 of the VIX May 29th 17 calls for 55 cents. They did that on Tuesday, when VIX was at 1331. Now, I'm going to go through 3 trades that are all a funny size and all appear to be similar, and they were done over the course of a couple of days, and they're triple stupid. You ready? And it's a triple turnaround stupid, and you'll know why in a minute. So on Thursday with VIX at 1289, they bought the VIX May 15th 14 calls for 58 cents. And then on Thursday, I believe a little earlier in the day, actually, with VIX at 1310, they bought the VIX May 15th 14 and a half calls for 31 cents. And then this morning, with VIX again back down at 1289, they bought 180 of the VIX May 15th 15 calls for 25 cents. They bought 180 of the 14 calls, 180 of the 14 and a half calls, and 180 of the 15 calls. So this is a VIX turnaround stupid because they expect everybody to do a 180.
They thought they would slip under the radar, only doing their 180 lots. No one would notice them. It's not a 5,000 loss, not a 10,000 loss. It's not what normally gets on our radar. But no, you have been uncovered by the sleuth that is Dr. VIX. Triple stupid. Now, it's not quite the stupid because it wasn't all done at the outset, right? So I kind of call these when they're kind of legging into more of an inertial stupid, but in this case, it's inertial going the other way. It kept going against them. They kept buying farther out of the money strikes. So that's a little bit of a head scratcher. Usually you do it this way. Maybe you buy, what was it, the first strike? The 14s you said, or 14 halves? And then
they did I think they actually did the 14 halves before the 14s. I'm going to check.
That's just bonkers to me then. So usually you buy the lower strike, it moves your way, and maybe you want to buy a little more, but it's already moved your way, so you kind of buy some more at the money, which whatever is the higher strike. I could see doing it that way. It's really the only use case I have for a stupid. But doing it this way, all sorts of backwards.
Yeah, they did do the 14 and a halves before the 14s. I just did them in the order of the strikes, just
maybe
just because you know what, it's my segment and I do whatever the hell I want.
Maybe it's a capitulation stupid because they bought the 14 and a halves, so fell out of bed. Like, okay, I guess we got buy the 14. I don't know what they're doing with the 15s, then. That's just that's a head scratcher to me as well. That's completely backwards what they're doing.
I think they're just mad.
I'll show them.
I worked at I worked at a prop trading place like 25 years ago, and we had this one person that would always try to put on a revenge trade. Market's wrong. I'm doubling down right now, and the head guy would always go, the revenge trade.
I'm guessing that guy had a long and successful trading career.
Yeah. So, no, I don't know where they are now.
I don't know. This triple stupid trader, I'm thinking he won't have a long, especially the way he did it. I mean, what are you doing? I could see starting with the 15s and, it's going against me. Okay, now I'm doing 14 halves. Still going against me. Now I leverage down to I could maybe see an argument for that. I still don't love it. But the other way, that makes 0 sense. So
yeah, it's not a whole lot of logic. And but we'll see. You and I are sitting here talking, and we are getting pelted by a geomagnetic storm right now.
So we could go off the air at any moment.
No, they've actually had some problems with radios and stuff over in Europe when they were facing the sun, and now it's supposed to be hitting us. I personally think I think Andrew was out there. He's actually a spy master, and he's got to make sure that all of his equipment's going to survive the solar storm.
We are the Old Options Insider Radio Network, so they could come for us next, sir. You never know. Anything else catching your eye on the weekly front, sir?
No, the trade that I just told you was the only weekly trade today.
Yeah, that was That was an interesting one.
It really was not the best. The last couple of weeks, and because I hadn't been on in a while, the last couple of weeks, I was like, man, people are really, starting to use weeklies an awful lot. They're making it easy on me. And you when you started off, you used to start off saying, now you've got 23 minutes to do this. And I think the inside joke there was always, you got 23 minutes to do this. You probably could talk about every single weekly trade in 23 minutes. In the past couple of weeks, I couldn't have. But this week, it wasn't as active with the weeklies.
You know what? We're spooking them. They know you're going to sniff them out now, even their 180 lots. So they're a little bit more reticent to pull the trigger because they know you're going to make fun of them here on the show when they're legging into their triple stupids.
Triple stupid.
The dreaded triple stupid. All right, let's keep rolling out here, see what else is lighting it up this week in a kind of light week. Like we said today, 428,000 contracts on the tape for VIX. The big dog, 33,000 of the May 17s. You like those, listeners? 17 strike. Now, number 2, 21,000 of the May 18s. Number 3, 21,000 as well of the May 16s. So maybe a little bit of vertical action there. Number 4, about 20,000 of the June 13 puts. Rock Lobster just talking about those, saying those are kind of the trade du jour he's been noticing out there in VIX for a while. Let's look really quickly and see what those bad boys are going up for today. Prices around 30 cents, listeners, 29 to 31 cents. So you like those June 13 puts for 30 cents? Is that a good do you think? And then about 20,000 as well of the May 20 calls, rounding out a kind of light day. Yesterday, also fairly light, 543 on the tape. The big dog, 36,500 of the June 26s. Weird size, weird strike, all kinds of weird. Number 2, also 36,000 of the June 30s. So maybe some funky vertical action there. Number 3, 30,000 of the May 18s. Number 4, 29,000 and change of the June 20s. And rounding out the top 5 yesterday, 22,000 of the May 13 half puts. A Wednesday, also fairly light, 640 on the tape. The big dog, 46,004. Of the May 16 calls, followed by 35,000 of the May 15 halves, 35,000 as well of the May 14 calls. Number 4, 32,000 of the May 14 puts, and rounding out the top 5 on a fairly light Wednesday, 31,000 of the May 18 calls. Tuesday was the banger day, 1.2 million. That's the first M handle we've seen in VIX in a little while. Even Fed Week didn't really gin up the volume like we'd expect. 106,000 was your big print on Tuesday. That was the June 14 puts, followed by 83,000 for number 2 of the June 20s, 65,000 for number 3 of the June 30s, number 4, 64,000 of the June 15 puts, and rounding out the top 5 on an active Tuesday, 63,000 of the May 13 half puts. Scrolling back to Monday, a decently active day as well. Not quite a million, but close. 876 on the tape. The big dog, this is a weird one, Mr. Rhoads. I'm not sure if you saw this one. The big dog, 76,000 of the AUG 25 calls and 76,000 of the AUG 15 puts for 2. Number 3, 46,000 of the AUG 16 calls. Number 4, 46,000 of the AUG 16 puts. And rounding out the top 5, 29,000 of the July 14 puts. We did notice this during the option block on Monday. I said we might come back to it on vol views. A print that went up on Monday, all kinds of funky, and all went up late too. So take some of these executions with a bit of a grain of salt. Looks like paper sold 75,000 of the AUG 25 calls for 86 cents, then bought maybe the 62,500 of the 15 puts also in August for $1.27. So first blush, like, oh, they're doing maybe a collar on VIX. You don't see it too often, but a collar paid 41 cents for it. But then you notice they snuck in there at the same time. Looks like they sold 36,250 of the AUG 16 calls for 206 and bought 43,500 of the AUG 16 puts. So doing a synthetic short on that strike as well for $1.91. So doing that whole thing for, looks like, 15 cents there. So yeah, just all sorts of weirdness, ratios. Looks like they ended up net doing 76,000 as well of the 15 puts. And then, the ratios were all sorts of funky. It looks like on the surface, Mr. Rhoads, they were doing a ratio synthetic short on the 16 strike in August, and then against it, potentially buying 62,000, and actually, I guess they bumped it up to 76,000 total eventually, of the, that would at least line up volume-wise, of the AUG 15 puts, and also selling about 76,000 of the AUG 25 calls. So all sorts of funk in this one. Did you notice this crazy print going up on Monday, sir?
I didn't. I wrote one up last weekend that was similar, where there was a synthetic long that was put on, and then not as many calls sold against that synthetic long. I'm looking at the quotes when they put on the synthetic leg of this, because it would make a heck of a lot more sense to me if they were synthetically long.
Yeah, exactly.
And they sold the call and bought the put.
Yes, exactly.
The only other thing that I can think of is, and how many did they do of the, how big was the collar?
76,000 of the outside legs.
And what was the, because I mean, this is done in so many legs, and I'm looking at it right now. It's easier for me to ask you the numbers. And then what's the size of the synthetic?
It's 43,500 of the puts for $191 and 36,250 of the calls for 206. So they could have tried to do that for kind of, a neutral level as well. But yeah, it's all sorts of funkalicious funk, as we like to say out there in the vol space, sir.
I'm gonna go to the tape when I have a chance.
Yeah, it went up late too. So
usually it's easier for me to do a little quantitative work while you chat with the other guests, but there is no other
There's no other guest.
So,
and we have to get to the VSTOXX in a little bit too.
Afterwards. But what I'm actually thinking here is what I want to do is I want to go look and see if there's any large volume in the August futures around the same time.
Yeah, it has to be a futures leg that we're missing.
I just that's really what I want to try to do. But again, typing and talking ain't my strength anymore.
Long futures, short the synthetic against it, and then this funky collar around it. It'd be a weird one, but we have seen weird things in the past in VIX land. You're right. I like it a lot better the other way if they're buying the synthetic. And again, take some of these executions with a grain of salt, because it all went up late, listeners. So we have to kind of dig in a little bit more. But
which means they negotiated it out.
Yes.
Of the pit,
yes.
And then they put it on the tape. They figured out who was going to get a piece.
Yep.
And all of that kind of stuff. For those of you that haven't seen what's going on the floor, I loved when things like that would go on back when I was at SIBO, because they would, it would give me an opportunity to kind of explain what kind of trades were being negotiated out when they did things.
That's fun.
Like that.
Well, meanwhile, when you're on the floor, you hate this stuff because you don't see any of it until it's printed in your face. But that's a conversation for another day.
There's a time period around when this hit the tape where you've got some decent August volume. So I might be onto something here. I'm just looking at an intraday chart.
We might have a future Substack entry for the once and future and now present Dr. VSTOXX. Speaking of his newly minted doctorate, let's get right now to a little bit of the International Volatility Review.
It's time to explore what's happening in the volatility market beyond our shores. It's time for the International Volatility Review. The International Volatility segment is brought to you by Eurex, home of Euro stocks, VSTOXX, DAX, and the German government bond-based Eurobund, Eurobobble, Euroshots derivatives. Eurex is the leading European derivatives exchange. Learn more about trading VSTOXX futures and options, the European Volatility Benchmark, at www.eurex.com/VSTOXX.
All right, everybody, welcome to the International Vol Review. And if you want even more International Vol goodness, stay tuned to the end of the show, right after the end of the show, because we'll have a bonus International Vol segment holding down the Eurex hot seat this week. We'll have Gary Norden, the hedge fund manager over there at NN Squared Capital. You may have also seen him on YouTube doing a lot of futures and options educating over there. So fascinating stuff looking at the international vol perspective. And speaking of the international vol perspective, as you might imagine, VSTOXX moving in the same direction as VIX. VIX was down a full point this week. VSTOXX was down almost a full point, about 0.8 of a point. So are they moving back 1-to-1 again? Well, I guess we'll have to find out. VSTOXX, when we kicked off the show, was at a 1360. Again, that 52-week range on VSTOXX. The high 23 1/3 back in October of last year. The low came 1212 in December of last year. We did threaten it again earlier this year in March, and looks like we're going to start, maybe this continues, threatening it again if this whole, dare I say it, sell in May and fill in the rest continues on the vol side. We might be threatening that again out there. But Mr. Rhoads, the newly minted once and future Dr. VSTOXX. You've been crunching a lot of the numbers out here. VSTOXX coming into the show 1360. What's been catching your eye out there this week?
We talked a bit about the approach that I take, and I do trade VSTOXX and VIX against each other. I got a pretty simple process to go about doing that. If I could, get everybody to leave me alone and seal myself in a basement for about 12 hours, I could finally write the freaking thing up. But I'm still short VSTOXX I'm still long VIX and short VSTOXX. It's been almost exactly a month. It was 5 Fridays ago, I believe, where I flipped over. Down 260 on my long VIX, but up 4 points on my short VSTOXX. Typically, the average front month future spread over for VSTOXX versus VIX is VSTOXX at a $1.60 premium to VIX, and I take a look at those spreads. I take a look at the relationship over the last 10 days or so, and when we get to an extreme in one direction or another, I flip from being long one and short the other. So I'm always in the market. I'm always either long VSTOXX and short VIX, or long VIX and short VSTOXX, and I continue to be short the VSTOXX and long VIX. VSTOXX, it does hold up a bit more than VIX historically. It's doing it right now, continues to do that. You've got to assume that there's more risk on the doorstep of the companies that comprise the Euro Stoxx 50 than the S&P 500 right now. There's still some, there's still some residual stuff going on that goes all the way back to Brexit that's impacting business over in Europe. It takes forever to work some of these things out. So, you would expect VSTOXX to be at a premium right now. It's actually at a 30, or when I priced it out, which is at 11 a.m. Eastern every day, the VSTOXX was actually at a 35-cent discount to spot VIX. And you know what? That's a signal to flip my position. I totally missed the little signal there. So it's time for me to go buy when we're done, and nobody front run me. When we're done in 11 minutes, I've got to go cover my short VSTOXX and sell my VIX and flip to being short VIX and long VSTOXX. So the signal did flip just before mid-morning this morning. I was just had my head looking for all those weekly trades. So welcome
to my world. You miss trades because you're
right now
too busy doing shows that you miss all the trades. Welcome to my world, sir.
Yeah. So I miss an awful lot these days.
So you're flipping. You're flipping your spread, just to be clear here for our listeners.
Yeah,
you are
I'm flipping my spread. I was looking, and then I have a spreadsheet that just pulls the numbers in at 11 Eastern each day, and there's one little cell that tells me when the signal changes, and I just looked at the cell, and I'm like, oh my goodness, the signal changed. So I got to go do some trading.
That you do, sir. And, interesting, I was chatting with our guest at the end of the show, which you'll hear in a few minutes, listeners, about VIX versus VSTOXX, some of the things you were just laying down. And he was making an interesting point, one I believe you've made in the past as well, that he is kind of a little more intrigued looking forward for maybe more potential upside in VSTOXX versus VIX. And not just for the election premium, everything's got election premium baked into it, but also obviously with VSTOXX, there's a little bit extra added in there because of all the tensions with Ukraine. We have seen in the past that when things do flare up in that side of the world, VSTOXX, as you probably would expect, does tend to outperform. Last time it was somewhere around 10 points in the VSTOXX versus the VIX cash. So you can maybe look for something in that range potentially, maybe more if things are extremely dramatic out there. So does that potential maybe for a little bit more outperformance for the upside in the near term in VSTOXX? You think that's on the table, sir?
Oh yeah, absolutely. And anytime that we get a what we refer to as a volatility event, and it's interesting that it was mentioned, on the recording or on the pre-recorded comments that you're going to share in a sec. But typically, when we do get a volatility event and it has some sort of impact on Europe, you do get more bang for your buck out of VSTOXX than you do from VIX. So, yeah, when he says there's some potentially more upside out of VSTOXX than VIX these days, it's very, very difficult to disagree with that one.
Yeah, intriguing stuff. It's always fun to hear, it's called the International Vol Review after all. It's always fun to hear the international perspective on even domestic things like how the term structure is looking, how much juice they're pricing in for the U.S. election overseas, how potentially also the fact that because Ukraine is a part of this election domestically here as well, how there's maybe an extra potential for a little bit more upside depending on the outcome of the U.S. election in VSTOXX as well. So it's kind of an intriguing perspective. Again, the international view on how vol is looking. So stay tuned for that out there in a little bit, listeners. As we keep on rolling, we got to get to the crystal ball. Before we get there, we have to hit on Mr. Rhoads' favorite product because it did hit a new 52-week high as we were talking today of 43.82. It's at about a 43.70 right now. What am I talking about? I'm talking about his beloved SVIX. It was up 220 when we kicked off the show. Got a little higher, up about 232 to get that all-time high out there. So Mr. Rhoads famously said he wasn't fully out. Maybe that has changed now. Maybe he has, at this new all-time high, maybe he's getting the heck out of Dodge. Volume today was looking surprisingly robust, so the addition of those weeklies does seem to have helped things out. Also, probably a new all-time high. Not hurting things either out there. 7,000 contracts on the tape right now. That's not quite 2x. We're pretty close to it of the ADV, which is about 4,400 or so out there. So looking a little bit more robust. The size position out there right now is 2,600 of the June 45s. And if you're wondering, what are folks slinging out there today? Almost 1,000 of the June 42 puts. That's interesting. June 42 puts. Let's see. What are those bad boys going up for? They're going up for $2.30. Like paper might have been selling those. Ooh, that's aggressive. Selling the June 42 puts.
Very aggressive.
Yeah. I don't know if I like that one.
Yeah, I mean, we don't like them until they worked out quite well, So, maybe they're seeing something that we don't necessarily see. I have a whopping 100 SVIX right now.
So you're out of everything but the 100 lot.
All the rest of it has been called away.
Oh.
I've been flip flopping. Do I sell the 44 call that expires in a week? And then because I do plan on adding to it, but those are 40 cents by 90 cents right now. I don't feel like that's worth it. So I'm hanging on to my sole 100 SVIX for the moment. I'll probably start selling puts if it gets closer to 40 with the intent of picking some up.
Yeah, obviously we joke about the 42 puts. I don't think either of those like those, but what is a strike? What is a level you would think about nibbling at here?
Oh, definitely 40. It's just kind of a psychological number as well. But a 10% retracement. That's really where I'm coming up with that number. It's not just because it's a round number, but a 10% retracement is where I get interested in trying to get long.
You're not afraid of the Middle East vol explosion coming in and just wiping SVIX down to a 9?
Yeah. I just on this topic real quick, and last night was was the final evening that I was teaching Kelly Direct finance class, and the last session is about options and stuff. And I got the question, why doesn't everybody just buy SVIX and go away? And I pulled up some old charts to show why you don't do that, including Volmageddon.
Well, they were probably like 12 years old in February of 2018, so I guess it makes some sense. They wouldn't know that, but you don't have to dial the Wayback Machine that far to see the last time. Yeah, well, I mean, they say...
I mean, it's 2018.
And we haven't gone and looked. I haven't gone and checked in a while the call holdings on SVIX. Obviously, they have that as a protection for that rainy day, so you would expect it not to go the way of the dodo, the way XIV did, but still an intriguing scenario. How low can they go in SVIX is a good maybe theoretical question. Maybe we'll debate that on a future show, Mr. Once and Future Dr. VIX. As we keep on rolling out to the sibling product, UVIX, that one can get lower. 720 right now, down almost 0.75 of a point on the week, putting up 34,000 contracts today. The ADV is only 32,000, so that one's looking pretty active out there today. And if you wonder what the size position is out there in UVIX, it's 7,828 of the May 11 halves that expire next week. So 11 half calls. Hopefully they overwrote those a long time ago. They're looking pretty good right now. The UVXY continues to erode as well at 28 when we kicked off the show, down 2 points. So take that, Mr. Rock Lobster, mocking my far out of the money UVXY puts. 38,000 contracts on the tape today. The ADV 49,000 continuing to move in the wrong direction, down another 21,000. So clearly this reverse split jazz ain't doing it for him on a volume perspective. They kind of have kiboshed their product a little bit out here. In terms of big positions, we got about 15,000 of the June 8 calls, 8-0. So these are obviously, must be pre-split adjusted 8 calls. Intriguing. That's also obviously gumming up the works. We have these vestigial options positions out there now as a result of the split, listeners, which makes things a little bit more complicated for folks. VXX coming in to start of the show, and as of right now, still at about a 12.20, down about half a point. Putting up 61,000 contracts today. The ADV is 85,000. That's down about 3,000 on the week. And the big boy position out there, 17, almost 18,000 of the June 13 puts, which are looking pretty good right now. Mr. Rhoads, anything catching your eye in the rest of the vol ETPs out there this week, sir?
No, not really. I did a little digging while you were talking, and our friends over at SVIX, they did something that I haven't seen them do before, but I haven't paid that much attention. They did own the June 30 calls, and they sold them yesterday and rolled down to now owning the June 26 calls. So I've seen them roll out before, and like I said, I haven't paid that much. I haven't focused that much, but that they did do that since you brought up their holding, and it does make me a lot more comfortable to hold that one if we do get the volatility event. When my students were asking me about SVIX, I just didn't even want to dive down into. They also own some calls to hedge themselves, just because that would have opened a whole nother can of worms and another hour-long discussion to try to clarify it all.
June 24 is going to give you a heck of a lot more bang for your buck, obviously, than the June 30th. By the way,
it was the 26th. I might have misspoke.
Oh, 26 is still better than the 30s. And by the way, listeners, of course, we're talking about the VIX calls that the SVIX folks hold against their SVIX position in case the worst does come to pass. So intriguing stuff out there. We've debated in the past, what does this really mean for SVIX? Is it going to gum up the works? Doesn't seem like it is right now with hitting yet another new all-time high. But now it's time to put all that aside, listeners. It's time to get dangerous. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, let's get to it. Let's get dangerous, as the old Darkwing Duck used to say. Last week on the show, it was myself. I was at a 13 double in VIX and a 1385 in VSTOXX. And we should say probably where VIX is at the end of the show here, listeners. That would probably help. And we're still pretty close to that 1275 level we were at the start of the show out there, about a 1270. So no joy for me. Meatball 1551 in VIX, 1661 in VSTOXX. No joy for him. Russell 1331 in VIX and a 1441. He's also going the palindromic route. No joy for him either, listeners. And then, of course, we had Sophie from the UVIX team last week, and she went 13.5 on VSTOXX. So no joy for any of us. None of us within the 10th of a point. Actually, I take it back. She was picking VSTOXX, and VSTOXX actually came out at a 1360. So here I am, coming into the start of the show at least, at a 1360. So here I am poo-pooing everyone, and yet, let me get the exact print. Yeah, it was 1360. So I should actually tip my cap to Sophie because she is a winner chicken dinner. This shows, listeners, I still have to dial in my VSTOXX. So she gets a bullseye for the week. And then I was actually closer than I gave myself credit. I was at a 1385. So 1360 for VSTOXX, a quarter of a point off, given the fact that I'm still dialing in my models here. Not exactly the worst prognostication. I already have Andrews here. I'll read it out last so it doesn't color us. Mr. Rhoads, you want to go first or you want to go last for picking this week?
I'll go first. Yeah, well, I'm just trying to figure out how should we do this because you know his guesses.
Yeah,
I'd go last.
You want to go last? Okay, I'll go first.
Yeah, I should go last. Just for fairness sake, playground bratty me would have gone, that's not fair. You know his numbers.
Andrew's a coward, so he only went for VIX. He's not courageous enough to do both. VSTOXX. I shall, of course, do both. We had about a 1275 with 1360 coming into the show, and VSTOXX listeners, I would love to say I see more of upside in vol on the horizon, but, their lack of reticence in crushing the vol out there, I don't know if that's going to change anytime soon. I'm going to say a little bit lower for myself. I'm going to say about a 1225 in VIX. And now, again, where the VSTOXX falls in relation, I think that might maybe narrow a little bit as well. So I'm going to say 1275 for VSTOXX. And I will give you Andrews as well, Mr. Rhoads, because I'm nice. He went sub 12 handle. He went 1197 in VIX. So there you go. That's your mark of this week, Mr. Rhoads. What you got?
What was his VIX? Sorry.
1197.
Oh, wow. See, I was actually going to go. Oh, I'm not going to do that now. I'm going 1226. No, I'm just kidding.
You probably would do that, sir.
I'm going to go 1289.
Oh, a little extra juice.
I was actually thinking closer to 13 before you told everybody else's. And I'll do 1350 on VSTOXX.
Interesting. I wouldn't be upset at seeing that come to pass. I wouldn't accept to see more. But it seems like they're not reticent to hit the bid out there right now, listeners. All right. That music means we have come to the end of this week's Volatility Sojourn. But you know what? If you're listening on the on-demand side, your saga is not done. No, you get a bonus, listeners, because we like you. And bonus international volatility review coming up immediately after this, so you can hear what the international perspective is on all things domestic and international vol. Stay tuned for that. It's a very intriguing conversation. We like getting folks on from across the pond, even if sometimes we have to do it at different times. Because otherwise it's the middle of the morning and they would be asleep during our time with the show. But we like to bring on multiple perspectives, so stay tuned for that after the show, listeners. Of course, you know where to go to check out Andrew's yachting tips. It's yachtingisgreat.com as well as optionpit.com, the place to go to learn more. Mr. Rhoads, where should folks go if they want to follow your Substack or perhaps the latest VSTOXX research you have coming out?
Well, follow me on Twitter, and anything I put out, I automatically put out there on Twitter. It's my full name, 2 L's, 2 S's, 2 L's, Russell Rhoads. My Substack is that full name /Substack. And those are probably the two best places to find everything I'm doing. If you just happen to be at the Indianapolis Motor Speedway come Tuesday next week, search me out at the Kelley School of Business table for the big Indianapolis. Everybody kind of poo-poos the non-money center places, but the CFA Society of Indianapolis does a freaking awesome conference in the infield on the first day of practice every year at the 500.
Really?
So, oh yeah.
Can you even hear? Can you even hear the?
Somebody's listening. Come find me.
Can you even hear the instruction with the cars racing around you?
We're in the infield inside.
Oh, inside.
You do get to walk around the garages and everything. It really is a cool event. I'll take you next year.
There are definitely worse venues than that. I've actually never been to the Indy. All my years in Chicago, I've never been down to the old Brickyard, is what they call it, right? So intriguing stuff out there. Check them out over there at Russell Rhoads, 2 L's, RHOADS on the old Twitters. And if you want to check out his vol research, UREX.com, EUREX is the place to go. Or if you want to go dive straight into VSTOXX, just go to STOXX, STOXX.com. That'll get you straight to all the latest data, open, close, historical data, volume, all the stuff you might want to know if you want to dip your toes into a little bit of VSTOXX trading. That's going to do it for us on the show this week. Again, stay tuned for the bonus international vol review segment. And then if you're listening live, I'll be back in a little bit with options oddities. If you want to check that out, theoptionsinsider.com/pro is the place to go to get that info. And we're back again next week, another episode of Volatility Views. Stay safe out there, everybody. All right, everybody, welcome to this bonus edition of the International Volatility Review, recording it outside of our usual showtime there on Fridays because we have a guest who's beaming in from outside of, let's say, our time zone. Moving a few away, all the way over to Perth, Western Australia, where we are joined for the first time by Gary Norden, a hedge fund manager over there at NN Squared Capital, also a bit of a vol YouTuber. Gary, welcome to the Volatility Views program.
Thank you, Mark. Thanks for having me on. It's a pleasure to be here.
And Gary, as we are wont to do with all of our first-timers here on the network, why don't you go ahead and give our audience a bit of an overview of your background in the world of derivatives, as well as what it is you do over there at NN Squared Capital.
Sure. So my derivatives background is over 30 years. I started as a derivatives trader when I was 19 for a Japanese investment bank trading Japanese warrants during the crash of the Nikkei. I moved down in the early 90s to the live floor as an options market maker. I also became head of options for NatWest, one of the largest banks, or the largest bank at the time in the UK. I've traded futures, options, convertible bonds for investment banks. So I've been around various different derivatives for over 30 years. NN Squared is a startup hedge fund. We have a kind of niche. We use derivatives to create strategies with roughly zero correlation to equity markets. And I also have some training programs I run to train traders in derivative trading.
Interesting. We obviously have a lot of guests on the network with, backgrounds on the SIBO like myself, or CME, or even NYSE or Amex on the derivative side. Don't get a lot from the Asian or indeed the life perspective. Is that where the colors, the yellow, the red, and the blue, does that all come from the live trading floor?
Yes, exactly. Yes. Yeah, exactly.
Interesting. Yeah, there are no red jackets on the CMEs. I was very curious about that. That's the Apex course, I guess. That was the trading jacket on life.
Yeah, the red jackets were what the locals wore. So obviously the banks were wearing their own colors and brokers were wearing their, the colors of the brokerage houses they had, but only those that traded with their own money wore red jackets. So, if you had a red jacket, you were trading with your own money. You're a real trader.
Let's get into some real trading talk right now, shall we? Of course, you're joining us on the International Volatility Review segment, where we look a little bit farther afield. Most of the show obviously based around domestic vol, VIX, and all the ETPs that trade around it. But we like to look farther afield every now and then, look at things like VSTOXX and also how international vol traders view even domestic volatility. So let's start there. It's obviously been an interesting couple of weeks on the volatility front, both internationally and domestically. We obviously have turmoil in the Middle East. We still have ongoing tension, to put it mildly, over there in Europe. So that's driving a lot of interest in the international vol front. Domestically, we have the Fed continuing to punt the ball. We, of course, have a looming election down the road, which is causing an interesting little blip in the term structure for VIX futures. So a lot to unpack. What is lighting up your tape these days on the volatility front, Gary?
Yeah, absolutely. And I think this is what's creating so many interesting potential opportunities out there. And let's throw in as well the Bank of Japan, right, that caused a massive move last Monday in the yen, and probably are not finished on that front either. I think everybody should be watching that as well. What will they do in terms of a more robust sort of method? Intervention's only obviously like a band-aid. So at some point they're going to come in with something a bit more. And I think that's something that all traders should be watching for in the next 3 to 4 months. But given all this stuff, and we're just coming through earnings season as well, and not just in the US, but in overseas as well, we've got kind of interesting. You mentioned the term structure, and I think that's where the opportunities lie. We're heading into summer now, and traditionally, it's a time I think that people will be looking to, to perhaps sell vol across the world. We've come through this sort of earnings season okay, but like you say, you've got these geopolitical events still going on in the Middle East and Ukraine, and say possibly the Bank of Japan. But what the term structure is allowing you is it's allowing you some trades that probably you wouldn't normally have, or some opportunities. So, for example, if people were looking at, let's say, VSTOXX and futures in the front months, they're trading at 14 handles. They still have potential scope to go lower if vol continues to go lower over the summer months, if that's what people think. But often traders will think about, well, I don't really want to short something there. What happens if any of these macro plays play up and it goes up? But the thing at the moment is, with the term structure, because of the election, that election in the US, which will have a global effect depending on how it goes, is obviously causing October, November, December futures across both VSTOXX and VIX to be a lot higher. And the reality is, it doesn't matter what happens in the short term to volatility. They're going to remain high. People are going to want to hedge themselves, protect themselves going in. It's a potential vol event, and we know the date of that vol event as well. So, we should expect that those months are going to hold up for over the summer, no matter what happens in the short term. So if you were thinking of selling some front month futures contracts here, some of the front months, maybe May, June, July, but we're a little bit worried, you could trade that into a spread and sell some of these front months and be buying, let's say, October or November, in the sort of the belief or the realization that those back months are not really going to go lower, even if the front months do. So if vol does come down over summer months, the trade should make money. And if there is a vol pop, well, you've got the protection by owning the back months. So I think that's something that is a possibility for those that want to sell some of these VSTOXX front months, but perhaps a bit worried about the macro events.
No, that makes a lot of sense. We have discussed that on the program in the past, the ability to maybe leg into some time spreads, given the way the term structure is shaping up. Take advantage of those distortions when they give it to you. And we're seeing right now, Gary, obviously, folks are not reticent to sell a little vol in the near term. I hate to use the old cliche of sell in May and go away, but that seems to be what they're doing already here, the first week of May, and they're already hitting the bid on vol. So maybe that strategy wouldn't be the worst right now, Gary.
Yeah, and I think that the vol selling programs are going to continue. They're not going to be put off here. I think what's going to be very interesting is what it looks like for those vol selling programs as we get closer and closer to October. If vol grinds lower over the summer, because relative to realized vol, if we move forward to the end of summer and vol does just grind lower over the summer months, then these September, October, November, December contracts potentially are going to look very expensive. Implied vol and the VSTOXX are going to look extremely expensive potentially, and it'll be really interesting in those vol selling programs and how they look at that, because obviously there's a reason why they're going to look expensive, and it'll be interesting to see whether they continue to sell into it.
Now, obviously, the whole world watches the U.S. elections as a volatility event because it impacts the global economy. But interestingly enough, you think maybe this election could have even more reverberations on the European, therefore the VSTOXX side of the fence than perhaps some other recent elections. Explain that to our listeners. Why do you think that, Gary?
Yeah, absolutely. So, as we all know, when America sneezes, the whole world catches a cold. And so we're all very well aware of that. But generally, U.S. elections are domestic focused, and whilst the rest of the world, if Wall Street fell, there'd be a move. It wouldn't necessarily, U.S. policies wouldn't necessarily affect globally, but this time they will. Unlike 4 years ago, 8 years ago, the Ukraine war's happening, and there's obviously a distinct difference in the candidates. And one of them will continue to fund Ukraine, and one of them almost certainly won't. And a lot depends on, again, whether he controls the House and is allowed to do what he needs, as well as just winning the presidency. But that is, I think, a significant issue for Europe. If the Ukraine funding doesn't continue, then I think the possibility of escalation of that conflict, of European nations sort of really starting to band together a bit more towards helping Ukraine, is going to increase. So I think VSTOXX futures, and potentially as we get further through the year, the options as well, even for US accounts, I think are going to be really, really interesting now. This election in the US has far more possibility for move and for vol in Europe than previous ones has because of that reason.
Yeah, something we mentioned on the show recently in the past as well, just the potential, it seems like, maybe for some near-term upside might be higher on the VSTOXX front than what we're seeing domestically for that exact reason. You're right. Yeah. There is that catalyst looming there in Ukraine. And in the past, if past is prologue, when we saw spikes driven by events over there, the spike in VSTOXX was roughly at least 10 points higher than what we saw in VIX. So if you're looking for a little bit of upside and maybe you don't think you're going to see it in the US anytime soon, then they maybe something with a little bit more international flavor, dare I say it, Gary, is the place to be looking. Now, Gary, when you're looking at trading volatility, you mentioned, your futures time spreads out there in VSTOXX. Is that your chosen vehicle? You like to sling the futures, let's say in VSTOXX? Are you a VIX options guy as well? Do you touch the ETPs? When you're looking to trade volatility, what are your chosen vehicles?
A range. So it depends on the type of trade we want. We've sort of moved away from some of the ETPs, look more at futures and options, both on VIX, VSTOXX, but also outright options as well, right? Because they are different. They offer you different possibilities. So depending on the type of trade that we want to structure, that will lend us to move towards one contract or another because they move differently, of course. Individual equities move differently to the VIX, for example. And so depending on what we want to do, we'll create a strategy around that.
Well, I do have good news for you, Gary, and everyone else who's hanging out in your time zone there, which is obviously nearly a full day different than what we're talking about here in the U.S. Is I just came back from the options industry conference last week, talking to a lot of the domestic exchanges here. And it does seem like there's a big push afoot here in the U.S. to cater more to you folks a little bit and try to open up the timeline for trading a little bit more. Obviously, we have the open and close bells. Futures, a little bit of a different story. They tend to trade a little bit longer than the equities do here in the U.S. But it does seem like they have heard your complaints, Gary, and it does seem like maybe, I won't say full 24-hour trading, but it does seem like maybe some more liquidity maybe heading into the hours where you are actually awake, Gary. So does that excite you and maybe a lot of your listeners over there in Australia going forward?
Yeah, absolutely. I can't wait to see what that's like and to get involved.
Well, Gary, I appreciate you taking some time out of your evening over there in Australia to join us here on the International Volatility Review segment. We'll have to get you on the regular showtime one of these days. We've done it with Australians in the past. It's a challenge, but we can make it work. So maybe we'll get you to beam in on the regular show. We'll get a full hour talking all sorts of volatility products with you. It should be kind of fun. But before we go, Gary, if folks are intrigued by anything we talked about here today, maybe some of your time spread strategies, or maybe they just want to reach out and learn more about what you're doing, where should they go? What should they do?
They can have a look. GaryNorden.com has just some general information about me. Norden Method is futures trading for those that want to take it that way. I have a free options course on learnoptions.net as well for those that want just a free overview on options markets.
There you go, listeners. 3 different URLs to check out. His last name, Norden, Norden, if you're looking to spell it there. I appreciate you joining us, Gary, and I look forward to chatting with you again on the show proper sometime in the near future.
Enjoyed it greatly, Mark. Thanks very much, and have a great night.
The International Volatility segment is brought to you by Eurex, home of Euro stocks, VSTOXX, DAX, and the German government bond-based Eurobund, Eurobabel, Euroshots derivatives. Eurex is the leading European derivatives exchange. Learn more about trading VSTOXX futures and options, the European volatility benchmark, at www.eurex.com/VSTOXX. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.